Hello and welcome back for another Polygon Matic price prediction update, and in this video I'll be diving deep into the technical analysis and also give you my next price targets here on the Matic chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, you can see that we are holding above our key area of support at around the $0.6753 mark, which is now acting as support for us to continue gearing up. We have also continued to obey the Elliot wave structures, and you can see that after seeing our massive crash on the 10th of June, we started this recovery to the upside in a move that has now been obeying the Elliot wave structures, where you can see that I'm terming this as a first wave to the upside. Then we saw a bit of a pullback here on the charts in the formation of this wave 2. Minimum target areas highlighted on the charts using this red target area that I came up with by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, giving me a minimum target area between the Fib level 0.5 and the Fib level 0.78. which is an area that lies between the $0.59 mark and the $0.5535 mark, which is an area that we fully maximized. And after fully maximizing that target area, you can see that we started this nice reaction to the upside in the formation of a larger Elliott wave count 3 that we expect after seeing the formation of a wave 2. And in my previous videos, I have been giving you target areas for this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. And that now gave me a minimum target area for the wave 3 at the fib level 1.618, and that is at around the $0.8118 mark. And that is the minimum that I'm expecting Matic to do in the formation of that wave 3. And since we are holding above a key area of support at around the $0.6753 mark, there are high chances that this key area of support is going to continue acting as support, and maybe at some point, since we saw a break above it, we can get a successful retest of that key area of support before we can continue gearing up, break through our next key area of resistance at around the $0.784 mark, and a break above that we can also watch out for a successful retest before we can fully maximize our minimum target area for this wave 3 at around the $0.81 mark. We also need to have in mind that since for the past 2 days we have been seeing a very nice pump to the upside, there are chances that at some point, before we can fully maximize our target areas in the formation of that wave 3, Matic is going to give us a bit of a cool off on the charts. And as a result of that, we can expect a bit of a short-term pullback on the charts that might last for a few hours. And you can see that here on the 1 hour chart, we seem to be seeing such a move on the charts. And there are chances that we can get back to our next key area of support at around the $0.67 mark, find support, and then get the bounce back to the upside, continue seeing the pump, and break through other key areas of resistances until we can fully maximize our target area in the formation of that wave 3. And if by any chance we lose that key area of support, then we have our next key area of support at around the $0.6227 mark. And within those areas, we can expect a turnaround once more and continue seeing our pump in the formation of this wave 3, fully maximizing our minimum target areas. So that is something that I wanted to highlight since we can expect it very soon in the market. And jumping to the 4-hour chart for further analysis and to still basing it on the Elliott wave structures, which is the long-term point of view here on the Matic chart, you can see that after Matic gave us our June lows at around the $0.32 mark, we saw a 5-wave move to the upside, having the wave 5 giving us a high at around the $1.3 mark, completing the formation of these larger Elliott wave count 1. Then we started a corrective structure in the formation of a larger Elliot wave count 2, where we have been breaking down in this ABC corrective structure, having the wave C fully maximizing our minimum target area for that wave 2. And since we have fully maximized that target area, I now believe that Matic is now ready for another massive pump in the formation of a larger Elliot wave count 3. And since we are within a reversal area within the formation of this wave 2, there are high chances that this turnaround to the upside in the formation of that wave 3 has now started. And all we need to see on the charts to confirm to us that the low is in and the start of that impulse has now started is a complete 5 wave move on the charts, followed by an ABC corrective structure before we can continue gearing up. Once we see such a movement on the charts and also a break above significant highs, that will be enough confirmation that the low for the second wave is in and that Matic is now giving us a massive pump to the upside in the formation of that wave 3 and giving you minimum target areas for that third wave by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That now gives me a target area for the wave 3 at the fib level 1.618, and that is at around the $2.1125 mark, and that is the minimum that we can expect Matic to do in the formation of that wave 3. And those are the moves that I'm watching out here on the Matic chart, and that is what we need to continue expecting. On the indicators, on the RSI, we are trading at around the 75 mark, meaning that we have managed to get into the overbought territory. Also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.